What's going on, guys? Jake Blickenstaff here with you guys tonight on a Tip Tuesday. And tonight I want to talk to you about taxes. We all hate them, but we all have to pay them. And so some of the things I want to cover this evening are going to be more or less along the lines of how you can use the current tax code to your advantage, things that are already set up for you, especially if you either own real estate, you own rental properties, or if you plan on purchasing some in the future. So now, before I dive into this, I need to let you know that I am not a tax professional. I am not giving tax advice. I'm simply sharing information that I have been told and that I have come across. So if you have any specific tax questions that you need answered, I always say that you need to go back and talk to your CPA or a tax attorney, so that way they can give you the most up-to-date current any information that you could possibly need based off your specific situation. So with that being said, let's dive right in. Over the last 2 days, I've gone to two different training events, one specifically just kind of on upcoming taxes and things that you can do to try to save on your taxes, along with some of those important events. I'm going to share my screen here in just a minute. I'm going to repeat some of those things that I learned, along with some of the upcoming deadlines that have to do with you, especially if you own a company, an LLC, even if it's just you, if you own any rental property. Also, some of the options that you have if you are a rental property owner, if you're wanting to take advantage of the current market and possibly sell that property to take advantage of some of that equity that you might have in a house and use that in the purchase of another one. Now, you can do that in a couple separate ways, but I'm gonna share both those with you. So taxes first. Let's see here. Today is the 9th. Tomorrow's the 10th. Corporate taxes for LLCs and S corps, those deadlines are actually going to be next week on the 15th. So if you haven't reached out to your CPA already, I would. Most of the time, if you have somebody that you work with on a regular basis and they haven't heard from you, then they usually go ahead and file an extension for you, or at least that's most CPAs that I've ever worked with, especially if you go back to them multiple times. So keep that in mind. A lot of people forget that. If you have any LLCs or rental properties, especially under those LLCs, you need to get that stuff filed a month before everybody else files their personal taxes, which gets me to the personal taxes due date. That's going to be April 15th. But one of the CPAs that was at the event this afternoon, he was talking about there's some new things rolling out with like PPP, along with unemployment in case that's an issue. So just kind of be aware of that. And, like I always say, get back with your CPA if you have any questions regarding your current situation, and make sure that you take advantage of the current tax code. It's definitely set up there for anybody that's involved in real estate and owns real estate to really be advantageous and help you out and kind of really help you build that wealth. So some of the other things that we covered was personal residence exclusions. So if you've lived in a property that was your primary residence for at least 2 years out of a 5-year period, then you are eligible to not have to pay any capital gains tax when you go to sell that house. Now, if at any point in time you turn that into a rental property, then same rule applies to where as long as you were there for 2 years out of a 5-year period, you should be good to go. Now, if you have specifically just rental property, something that you've never lived in, you have the ability to do what's called a 1031 exchange. And I'm going to share my screen here just a little bit and show you what that is and how you can defer your capital gains or profits on a rental property over to the next property. And you can do something what's called basically swap till you drop, where you can continue to defer those capital gains to each property and then to the next property and then to the next property, pretty much until you die, and never really have to pay those taxes on that. And so that's a huge wealth saving tip that you definitely need to look into if you're not already doing it. So with owning a home, there's some tax advantages that you can take advantage of, such as writing off your mortgage insurance, property taxes, PMI, if you've just refinanced any points that you've paid there. So make sure you give any of that paperwork over to your CPA. If you have rental properties, you can obviously take care of any of the depreciation that's going to help offset on paper, maybe any additional income that you might have. So all of these tax items, they're important because especially if you don't or haven't bought a house yet, whenever you go through the pre-qualification process, and I'm going to be making another video probably next week that does a deep dive on the pre-qual process and really what lenders are looking for throughout that whole process. But they're usually going to wind up wanting the past 2 years of tax returns. So you need to make sure that if you have buying a house on your radar, that you start getting a lot of your tax stuff taken care of or caught up if you aren't already there, because it's going to come up in the process. And then once you do wind up getting into a house, then you're really going to start seeing a lot of those tax benefits once you file taxes for the first time. Now, if you own land, some of the other things that you're able to take advantage of, they have state tax credits that you can utilize to offset some of that, along with conservation easement deductions. So I would look and talk to your local tax assessors and let them know kind of what your property is, and see if they have any specific programs that you might not be currently utilizing that you could take advantage of. So let me go ahead and share my screen real quick. All right, so some of the upcoming tax deadlines this year, like I was talking about, and I'm going to share this link below so that way you guys can go look at it also. Individual income tax returns is going to be April 15th, falls on a weekday. Estimated tax returns for 2020 tax year, it's going to be between July 15th and September 15th. Partnership returns, those are due March 15th. C Corp income tax returns, those are going to be due April 15th. S Corp, those returns are due March 15th, like I was talking about. And then you have some additional ones for trust, estate, gift tax, foreign partnership returns. Now, if you want just a quick down and dirty kind of deadline organized by date, it's right here below it, and you can look at each one throughout the year for this year. And they got all sorts of different stuff specifically for businesses, first quarter, second quarter, estimated taxes if you pay in advance. So that's definitely a good resource for you to check out. Now, the property tax and homestead exemptions, those are going to be due by April 1st. And I'm going to go into details about that and read this off to you. It's a little dry, but it's definitely something that you can take advantage of if you aren't already. So a homeowner is entitled to a homestead exemption on their home and land underneath, provided the home was owned by the homeowner and was their legal residence as of January 1st of the taxable year. To be granted a homestead exemption, a person must actually occupy the home, and the home is considered their legal residence for all purposes. Persons that are away from their home because of health reasons will not be denied homestead exemptions. A family member or friend can notify the tax receiver or tax commissioner, and the homestead exemption will be granted. When and where to file your tax or homestead exemptions. So property tax returns are required to be filed by April 1st. Homestead applications that are filed after April 1st will not be granted until the next calendar year. So we got a couple more weeks left in March. So I definitely take advantage of that. Your homestead applications are filed with the county tax official's office, usually tax commissioner or tax assessor, depending on your specific county and who they've kind of delegated that to. To receive homestead for the current tax year, homeowner can file an application for homestead exemptions for their home and land anytime during the prior year up to the deadline for filing returns. To receive the homestead exemption for the current tax year, the homeowner must have owned the property on January 1st and filed the homestead application by the same date. Property tax returns are due in the county. Exemptions offered by the state and counties. The state of Georgia offers homestead exemptions to all qualifying homeowners. In some counties, they have increased the amount of their homestead exemptions by local legislation above the amounts offered by the state. As a general rule, the exemptions offered by the county are more beneficial to the homeowner. So here's some of the homeowner exemptions offered by the state. You get a standard homeowner exemption. It says the home of each resident of Georgia that is actually occupied and used as the primary residence by the owner may be granted a $2,000 exemption from county and school taxes, except from school taxes levied by municipalities, and except to pay interest on to retire bond indebtedness. The $2,000 is deducted from the 40% assessed value of the homestead. The owner of a dwelling, house, or farm that is granted a homestead exemption may also claim a homestead exemption in participation with the program of rural housing under contract with the local housing authority. One of the other ones is individuals 65 years of age and older may claim a $4,000 exemption. Individuals 62 years and older may claim additional exemptions for educational purposes, floating inflation proof exemption, disabled veteran or surviving spouse or U.S. service member, surviving spouse or peace officer or firefighter. So this is a great site, and this comes straight from the Department of Revenue. So it's dor.georgia.gov. And then property tax homestead exemption. So I'm gonna have this link below this video or also in the email, however you are coming across this. So you guys can check that out. Now, one of the other things that I wanted to show with you guys or share with you is the 1031 exchange. So let me jump over to here. All right, so on the 1031 exchanges, what you need to know is it must be done with like and kind properties. And so what a like and kind property is you can trade a house for a house. You can trade a house for an apartment complex, a farm for an apartment complex, a single family home for a duplex for a ranch. As long as it's real property, you can utilize the 1031 exchange if you're an investor. And this only is valid if you have investment property. So the 1031 exchange must be done with like and kind property. The rules for like kind property have evolved over the rules. In 1984, section 1031 of the tax code was changed so that the definition of like kind was dramatically expanded. You now have the option to sell a rental house and buy a small apartment building. Before the rule changed, you didn't have to trade a house for a house, but a 3-story apartment building for a 3-story apartment building. So you have what's called the 3 property rule. Once you decide to utilize the 1031 exchange process, you have to identify up to 3 potential properties to buy after you close on the rental property that you're wanting to sell. And most investors limit themselves to up to 3 properties to avoid being subject to more complex tests and paperwork. Now, part of that process also, there's what's called the 200% rule. So you can identify any number of replacement properties you want to purchase as long as their eventual combined fair market value isn't more than 200% of your relinquished property. So let's say you sell a property for $500,000. The combined market value of the purchase should be no more than twice that, or $1 million. And the way that timeline works is you're going to have 45 days from the date which you close on the property that you sell to identify those 3 additional properties that you intend on buying. Now, you don't actually have to buy all 3 of those or any of those specific ones, but you do have to identify 3 within that 45 days, and then you have to close on one of those properties within 180 days. So once the replacement property is selected, you have 180 days from the date of the original property being sold to close on the replacement property. Now, there's a bunch of additional details in between there, things that can happen along the way that can kind of trip you up. There's what's called a QI, or a qualified intermediary. So essentially your funds from the sale of the property goes into an escrow account that's held by your QI. One of the QIs that kind of gave us a little presentation was Old Republic Exchange. And The process that they said to go through this is it really doesn't take longer than an hour or two to accomplish. So if you're a couple days out from selling one of your investment properties, just reach out to any QI and have them set up the process. It's usually about $400 to $800 to have the option to be able to utilize a 1031 exchange. You don't have to do it, but the option is there before you close. You have to do it. And then they'll walk you through everything else that you need to know. So that's all I got for you today. And the big thing for March is, like I said, taxes, 1031 exchange, and homestead exemptions. All of those are important that you need to do, especially if you own or invest in real estate. And being able to minimize how much taxes you actually pay is it's really a beautiful thing. And the laws are already written for you to take advantage of it. So why not take advantage of it and keep more of that money in your pocket? So once again, Jake Blickenstaff here with another Tip Tuesday video, hopefully helping you guys out along your investing and financial career to really grow your wealth and get to that level of financial independence that we all want to be at. So if there's anything that I can do for you real estate related, feel free to reach out, and we'll see you guys on the next one.